Okay. Good morning, everyone, and welcome to another of our Female Entrepreneurship Support Program. It's a collaborative initiative between TechQuest STEM Academy and Junub Open Space. And this initiative is funded by the AfriLabs Capacity Building Programme through Agence Française de Développement and the Digital Africa Seed Fund. My name is Dr. Itoro Emembolu. I'm a director at TechQuest STEM Academy. So today we'll be speaking about financial management, and we're supposed to have two of our mentors here, and one of them is being delayed. There is some technical issues, and we're working to resolve that. But we have our second mentor here, who is very experienced, Mrs Olubunmi Omonubi, who is the managing director of Jotda Elevated Services. You are very welcome.
Thank you.
Yes, so before we go on, as we usually do during our sessions, please introduce yourselves in the chat box. Tell us where you're connecting from, and say hello, and we will take your questions. If you have any questions, please put them in the chat box, and we'll take the questions as we go along. I will just quickly run through Mrs. Omonubi's profile. Okay, and as I've mentioned, she's the director of Jotda Elevated Services. It has the brand name Accounting Nsync, and she has worked with a huge number of businesses across Nigeria to provide support in bookkeeping, accounting, audits, operational structures, tax management, and other accounting-related services. She holds a BSc in accounting with distinctions. She has a master's in business management with commendations, and she's part qualified ACCA professional, and she has also obtained other certifications across the years. And Mrs. Omonubi is passionate about small and medium-sized businesses, and she has hopes to help them achieve their financial goals and try to maintain the sustainability of the business. So once again, you are very welcome. We are in good hands. So we look forward to learning from you today. So you're very welcome.
Thank you very much. Thank you. So do I start?
Yes, you would start. We'll take the questions as they come along. Once you finish talking, or would you want them to take the questions while you go on? While it comes up?
I think I would like them at the end,
okay,
so that we don't have disruptions, and maybe your question might be answered as the training goes on. So if the question still stands, then we can take them at the end so that we don't disrupt the flow. Is that fine?
Yes, that's fine. So please go ahead when you are.
Okay, thank you so much, Dr. Itoro. I really, really love talking with small and medium-sized businesses and startups, and I appreciate the opportunity to talk to people across Africa to help them to grow their business and to sustain their business. So, as you already said, my name is Olubunmi Omonubi. I'm the MD of Accounting Nsync, or Jotda Elevated Services. And today, let me just quickly give, a brief introduction of myself. So maybe you know who I am and my experience. I have over 10 years of experience with working with businesses. I have worked in over 20 industries and counting. I've worked with over 300 businesses in bookkeeping, structure, and performance. And as Dr. Itoro said, I am very, very passionate about supporting SMEs with their profitability and sustainability. Also, I love to ensure that the tax issues of businesses are sorted, because it's one thing that can, disrupt your business, shut down your business, and make you lose money that you're actually working for. So enough about myself. Let's jump right into the masterclass for today. So today, I'll be focusing on 3 major areas, and I'll be breaking it down as we go on. So we're talking about financial statements, we're talking about accounting software, I'm talking about payroll management. Like I said at the beginning, towards the end, we would have a question and answer session. So please keep your questions coming in as I go on, okay? Okay, so what we'll be trying to get at the end of this class is knowing the key financial statements, right? Understanding the purposes of each of the financial statements, understanding how you can get documents to prepare these financial statements, and knowing the options of financial statements that you can work with. Then we'll also be talking about tips for using financial statements and financial softwares, accounting softwares, and how to document your payroll, right? And then staff tax management in Nigeria. Okay, so if you are outside Nigeria, you might want to know what taxes affect your staff or you as a business owner. Okay, so let's quickly jump in. I know I have just 20 minutes, so I'll try and make it as brief as possible, but very impactful. So for financial statements, we majorly have 3 types of, or 3 financial statements that you majorly will work with. So one, we have the profit and loss statement. So this kind of gives you, what you would be making for your business. So the operating expenses, the profits, the turnover, things like that. So I'll break down what each will contain later. But profit and loss statement, basically, as the name goes, tells you about your profit and your loss, right? So if you want to know if you are being profitable as a business monthly, quarterly, biannually, or annually, you want to look at your profit and loss statement. Then balance sheet, it kind of tells you of your liabilities, your assets, and your account balance. So you want to know, okay, how much do I have in my account balance? Then balance sheet, I would say, is at a period of time. So it tells you what your balances are as at a point. So as at today, as at yesterday, unlike profit and loss that gives you for a period. So 1st of January to 31st of January, 1st of January 2020 to 31st of December 2020. So profit and loss gives you for a period, but balance sheet gives you as at a day. Okay, so balance sheet will tell you what are your closing balances in your bank accounts, what are your debtors as at a point in time, what are your creditors, what are your assets, what are your liabilities, who do you owe money. So things like that, you kind of are able to let me mute this. You kind of are able to know exactly what your business is saying as at a point in time. Then cash flow statements kind of tell you how liquid you are. So how much cash do you have? So you want to know how much cash you have in your bank account. How much cash do you have in your petty cash? So basically telling you how liquid you are. So if you want to be able to know if you can immediately buy an asset, if you can immediately pay your creditors, so things like that, your cash flow statement will tell you. Okay, so I would like to point out key things about the profit and loss, because most times business owners might not want to, they want to look at their cash flow and their balance sheet at the end of the year or at the end of every period. But profit and loss is something that you want to know every single time, every month, every quarter, every period of time. You want to know your profit and your loss statement, right? So I'm going to point out key things you should be looking out for in your profit and loss. The first thing is your turnover. You want turnover basically means sales. How much are you making in sales? And please note, sales does not mean inflow. So let me differentiate. Sales means the money you are making from doing your normal business. So from selling shoes, from selling smoothies, from selling water, from selling cars, right? So what you do in your business, what your business is, that is your sales. But if money comes into your business, which is like inflow, maybe a loan to your business, your auntie, your uncle gave you money, or you yourself you put money into the business, or maybe you sold your fairly used car, or you sold your computer. All these other inflows are not your sales. They are like debts, or they are like gifts, or they are loan to the business, or other income. Your sales is basically what you make from running your business. That's your sales. So your profit and loss account tells you exactly what you are making in sales per period of time. Also, another thing you want to look at is your gross profit. So gross profit basically tells you how much profit you've made from your sales after you have spent from your direct expenses. So direct expenses are things that you need to be able to do to service your customers. So if, for example, you sell shoes, your direct expenses will be things like buying the shoes, or making the shoes, or paying, So let me use another example. If you are a ready-to-wear fashion business, your tailor's expenses, the buying of your fabric, your sewing supplies. So those things are direct expenses, right? So after taking away your direct expenses from your turnover, your sales, that is your gross profit. This gross profit is very important for you to know, because you want to know if after buying the direct things that you need to be able to service your customers, are you making profit, and how much of your sales are you keeping? You need to be able to know that, okay? COGS, or cost of goods sold, right, in the full name, means what your direct expenses mean. So a total of your direct expenses. So for example, like I said, the ready-to-wear business, your tailor's expenses, your fabric. So all these things, your direct expenses, make up your COGS, cost of goods sold. Okay, so when you take out your turnover your cost of goods sold from your turnover, you get gross profit. Okay, the next thing you want to look at is your operating expenses. So operating expenses, as the name goes, is what you spend for your business to run the business. So for example, your diesel, your fuel, your telephone credit, your internet, your staff salary, your repairs and maintenance, all these things are what you use to run your business, to get your business itself going. Okay, so these operating expenses are what you want to be able to classify. For your profit and loss, you will classify these expenses according to headings. You will total them, and that will give you your operating expenses. Okay, the next thing you want to think about is your net profit. So net profit is the profit after every expenses. So your COGS, your operating expenses, every expense are taken away from it. What you are left after that from your sales is your net profit. This net profit is very important for every business, because you want to know how much of what you are selling are you keeping for your business. And if you consistently make loss, you might not be sustainable. So you might need to look at your profit and loss regularly to see how you can manage your operating expenses. Operating expenses mostly are the key things that businesses can turn around. Yes, you might not be able to control your COGS, you might not be able to control your turnover, but you definitely should be able to control your operating expenses. So if you know, for example, in February, your sales are not looking so good, you want to limit the amount of expenses you make for that month. Then for the months that you know that you have high sales, these are your peak period, then maybe you want to do, that's at times you want to buy an asset, you want to do office repairs, you want to buy maybe a computer when you know that your sales are good. So with that, you can manage your cash flow. Okay, so those are the key things you need to think about when you are looking at your profit and loss statement. When preparing profit and loss statements, you might need to have some level of accounting knowledge to be able to prepare it. But at least when you get this statement, you should be able to understand what it's saying. Okay. Then what are the tools that you need to provide the accountant or you to prepare the financial statement? So one, you want to check your invoices. So your invoices basically will tell you how much you maybe charge for delivery, which is not coming to you. how much you charge for your actual your actual goods or your services, how much you charge to be able to get things. So, for example, a catering business, your client or your customer can ask you, oh, please buy me an ice chest or deliver it to me. So outside the things you'll be quoting in your invoices, you would have the cost of ice chests. You might have the cost of disposable cups and disposable spoons that they are paying for, and it's outside your service. So with your invoice, you're able to know, okay, this amount of money is for me, this amount of money is for other people, and this amount of money is for what I did on behalf of the customer. So your invoice is very important. And then you need to also look about your receipts. Sometimes your invoice might say it's start of 50,000, but your receipt might say 40,000 because they only paid 40, they are still owing 10. So your receipts could be able to tell you, okay, how much they've paid. And in Nigeria, where we have a cash-based system for VAT filing, your invoice might not be what you will use for VAT computation. It is your receipt that you use for VAT computation. Because your receipt will tell you, excuse me, your receipt will tell you exactly how much you received, not what you're expecting, okay? So basically, you want to have your receipts with you to be able to know how much exactly you have made in cash or in transfers or what things like that, okay? Then you need to have different Excel records. For example, you want to have record of your inventory. How much, for example, for a shoe making or shoe buying and selling in the company, you want to know how much of size 10 did you buy, how much of size 8 did you buy, how much of leather male shoe do you buy, how much of yellow or blue or whatever your classes of products are. You want to have that in your inventory record. It also helps you to quickly know if you are short on something and if what is selling more. So with your inventory record, you're able to make decision as a business owner. Another thing you want to keep record of are your assets. So assets is not necessarily just land or buildings. You also have things like furniture and fittings, so your tables, your chairs. You also have things like your computers, your printers, your generator. So things like that, you want to be able to know, okay, where are these assets? How much are they? What condition are they? Are they in good condition? Are they still working? Do you need to sell them off? So you need to put that in your asset register. Another key thing you need to take note of, mostly for us in Africa, is we need to keep a petty cash expense record. So whenever you take money to spend for business activities, so for example, you transfer money to yourself as a business owner, you need to keep record of what you spend that money for. If you send money to a staff to do some things for the business, you need to keep record of what you sent to the staff and how much they spent. So with that, you can now use this information to prepare your financial reports, okay? So for example, invoices and receipts will be used for your profit and loss. Your inventory records, your asset records will be used for your balance sheet. Your petty cash expenses will be used, okay, for your profit and loss, for your balance sheet, depending on what you are using your petty cash for. So those things are things that you need to consider. You have to put in place a structure when you are thinking of preparing financial records or you want to get financial records, right? Because if you don't keep this information correctly and completely, you won't be able to have a true status of your profit and loss or your balance sheet or your cash flow. Okay, so let's quickly move on to accounting software. So I've mentioned some accounting software here, which are very easy to use. So you can apply, you can use any of them. You can, so for Wave App, I know Wave App is no more active. You can't sign up anymore for Wave App in Nigeria or some, in fact, African countries. It's only in the US and Canada, I believe. So if you already have it, if you have already registered, you can still be using Wave App for your accounting, for your invoices and all that, okay? But if you don't already have it, you might not be able to use it to register. You might not be able to use it anymore because you can't sign up, okay? The next thing, the next application is Quickbooks. So Quickbooks is a bit more technical, but it's easy understand, if you are able to get the trick of debit, credit, assets, liabilities, operating expenses, is good for you to use. And if you have a staff, a junior accountant or an admin person, you can easily train that person to use. Normally we install the application and we train people within a day or two, and they are able to pick it up. So it's very easy with QuickBooks. And with QuickBooks, you can automatically generate profit and loss reports. You can generate assets, your balance sheet. You can generate your cash flow statements just by clicking some few buttons, right? So you just put in your records and you'll be able to generate the reports quickly. The same thing with Sage. Is very easy to use, but like I said, with these applications, you need to have some level of accounting background to be able to use them. But of course, it's not the other thing you can use, like I said before, Excel sheet, but it does not prepare financial reports for you. Unlike accounting software, when you're just feeding your information, it generates your financial report for you automatically. But one thing I will always say, every transaction has two legs. Right? In accounting application, accounting principles, every transaction has two legs. So for example, you get money paid into your bank account as sales. That one transaction has two legs. You have the sales and you have the bank. So the money is moving from sales into bank. Okay, so those two accounts will be recorded in. So, but if you know the principles of accounting, you'll be able to sort it out. Okay. Because of my time, I will just jet right on. So the next thing is payroll management. So this is very key for every business, mostly if you have a staff or even if it's just yourself. You need to be able to keep a record every month what you're paying. Well, even for yourself, if you are alone and you've said, okay, I want to pay myself 50,000 per month, because you are the business owner, you might decide that, oh, this month I didn't do very well, so let me pay myself just 30,000. Next month, if I do very well, I'll take 70,000, so 20,000 plus 50,000 the next month. But for your staff, if you have staff, you have to pay salaries. So you need to keep record. One thing you need to keep record for is one, your deductions. So most times, some companies allow staff to take loans, soft loans and all that towards or against their salaries. So you want to keep records of that. So what did Mr. Paul get? What did Ms. T get? What did this Mr. James take for the month? So when you are paying salary, you have to remember to deduct that from their salary before you pay. Because I find that most of the time when I'm doing financial records or financial reports for people, you see that you've given a loan of 10,000 and this person salary 50,000. You still pay the full 50,000 because you forgot that in the first or second week you gave this person 10,000. But if you have a payroll management system, you'll be able to just feed that into that. So when you are now paying, you just automatically calculate for you, and you can know how much you are going to pay the person. Okay, so another thing to consider when you are doing your payroll, managing your payroll, your taxes. In Nigeria, we have taxes like pay as you earn that are deducted from staff salaries. Some companies decide that they will take up that they will pay the staff salary completely, and they would take up paying the payee by themselves. So whatever structure you want to do, whether you're deducting or not deducting, you still have to know how much your liabilities are in terms of the staff tax, so you know how to pay or when to pay at a due time. Another key thing you need to consider is JD, so job descriptions and KPIs, key performance indicators for all staff. So I find that at most times, staff come in, you tell them do this, just verbally, and then after that they don't know what to do. They're always waiting for you to know the next steps to take. They're always waiting for you as a business owner to direct them on what to do. But if you have a job description that is given to them from the beginning and says your role is this, this, you report to this, and they have key performance indicators, tells them, okay, every week you give this report, every day you do this, every month end you do this, every quarter you do this. So everything is stated very clearly, and they don't start second guessing themselves. They know exactly what they are doing. And you yourself, the business owner, you know what you're expecting from them at every point in time. And that can also be a basis for you to be able to how will I appraise their performance. Okay, so these are things that you need to take into consideration when you are managing your staff. And of course, don't forget to remit all your staff taxes as appropriate. In Nigeria, for example, you can have penalty of up to 500,000 naira when you don't pay your taxes or file your taxes on time. So these are things that you need to take into consideration as a business owner. Okay, so I would like to, I don't know if I still have time. I know I have 20 minutes and I'm seeing 25 minutes. Dr. Itoro, can I still go ahead?
Yes, I think you can go ahead while we wait for
Hello?
it. Hello,
Sorry,
yes.
I can't hear you.
Hello, can you hear me?
Yes, I can hear you now.
Yes, you can please go ahead while we wait for Tayera to still log in. He hasn't logged in yet. So please go ahead.
Okay, so I'll just go on my other slides. I just put a few slides just in case I have time to just
Hello. Hello, Olubunmi. Hello, Olubunmi, can you hear me? Okay, while we wait for Olubunmi to get connected back, please put your questions in the chat box so that we could address those as they come along. I can see a question about what's the JD. JD is the job description. Thank you, Juliet. So we will try to get Olubunmi back on, and we're also still expecting our second mentor online. So please just give us a moment and please put your questions there. Yes, KPI is the key performance indicators. Yes, so she would address that once she comes back on. So please put your questions in the chat box and she would be back on in a moment. Okay, we're still waiting for Olubunmi to get connected. So we have a question from Taiwo that asks the difference between gross profit and net profit. Hello, Olubunmi, are you back online?
Yes, thank you. I was just yanked off.
Oh, sorry about that.
So sorry.
It's one of those things, the technical issues, but we would.
Okay.
Thank you. Welcome back. But just before you go on,
so I can continue, right?
Yes, but would you like to take one of the questions? Taiwo asked the difference between gross profit and net profit.
Difference between gross profit and net profit, right?
Yes.
Hello?
Yes, the difference between gross profit and net profit. Hello, Olubunmi. Hello, can you hear me? Hello? It seems it's still hanging, but hello, Olubunmi. Okay, it seems it has gone off again. Okay, so Taiwo was asking the difference between gross profit and net profit. So a gross profit is the profit you earn after you've taken out the cost of goods. And then the net profit is the profit that you have after all after you've taken out your cost of goods. Hello. Hello, Olubunmi. Yes, we can hear you. Okay.
Yes, I can hear you.
So we're asking the difference between gross profit and net profit.
Yeah, okay. Yeah, I've just okay. So let me explain. So gross profit is kind of the first profit you want to know. You get gross profit after taking your direct expenses from your sales. So when you deduct all the expenses that you use the expenses you spend on things like, okay, let me use an example. For a shoe production business, you would buy leather, you would pay your workers, and not just your staff running, but your professional staff that you pay as you go, right? Then you want to also buy things that you use to produce the shoes. So all these expenses are your direct expenses. When you total these expenses and you take it away from your sales, that is your gross profit. So this profit is very important because it tells you whether after you have spent all the direct expenses, you are able to still make profit. Okay. Then the net profit is deducting all the expenses, whether your direct expenses, operating expenses, all the expenses of your business. After deducting it from your sales, you want to know how much is left for your business. So that money left is your net profit. So that's the difference.
Okay, that's fine.
I hope that answers the question. Okay.
Yes, please go on.
Okay, so like I said, there are majorly 4 tax agencies that affect the businesses in Nigeria, depending on whether you are a limited liability company, you are an enterprise, you are an NGO, on all that, partnerships and all that. So it depends on what business you are able to know how you relate. But majorly 4 agencies affect your business. So one is a CAC. So you want to know, for example, CAC basically is the body that registers business. So every year you are supposed to file your accounts, or within the first 18 months of starting your business. And after that, 12 months after that, you have to file your accounts with CAC every year, okay? Then FRS, Federal Inland Revenue Services, is basically has to do with things like VAT, things like company income tax, things like withholding tax for limited liability companies. So things like that are what you will be thinking about when you want to relate to FIRS. LIRS is the Lagos State Tax Office. You have IRS services, IRS agencies in other states. So you want to know your payee, that's your payers, and bless me, your payers, your staff tax, your director's tax, the business premises, and other state taxes will what you'll be thinking about when you are looking at the IRS agency. Then, of course, the local government is what has to do with your local, where your business is located. So sometimes you have your TV licenses, you have your radio licenses, you have your bin disposal, and things like that, right? In terms of your local government taxes, okay? So that's basically the agencies you need to be thinking about when you are considering the taxes for businesses and for staff, right? I already said for CAC, you are looking at annual returns, change of address, and all that, right? FRS, I've already mentioned it. And like I said, there are penalties for not complying. For FRS, for example, you have up to 75, sometimes 95 per month that you have to pay in penalties. And like I already mentioned, for PE, you have your you have up to 500,000 that you'll be paying if you default. I'd like to mention here, you can see there is withholding tax for FRS and also withholding tax for LRS. So sometimes, okay, let me differentiate it. Withholding tax for FRS is withholding the tax that you've deducted from your professional services and from other classes of services, and that are from limited liability companies. So if you deduct those withholding tax from limited liability companies, you remit it with FIRS. But if you deduct the withholding tax from enterprises, individuals, and all that, you have to remit it in LIRS. So you seem to have withholding tax in FIRS and withholding tax in LIRS, okay? Then also, I wanted to point out some key things in staff management and internal controls. So I already said staff roles, you need to be able to classify your staff roles to ensure your sustainability and financial success. So what do I mean by that? So for every role that you are creating, you have to ensure that that role fits into achieving your goal. So for example, you might not need a customer service person if you do not need to be answering phone calls all the time. You don't need a customer service unit if you're not going to, your plan is not to be answering calls all the time. You might not need an in-house marketer if you are not going to consistently be doing marketing. So you need to structure your staff roles. So forget names now. Your staff, the roles that you are going to have in your company, it has to match with what your company is going to be achieving. Also, you want to be able to assign roles that do not kind of how will I say, contradicts itself. So Mr. A is doing this, or let's say what role should I say now? The accountant is doing this, and then you have an admin person doing the same thing. If you have two roles doing the same thing, nobody will do it, okay? So you have to make sure that there are clear-cut roles for every staff job description, okay? Then I already mentioned KPIs, key performance indicators. But what is very important with this when you are trying to design this is that you want to be clear exactly what they will be doing, right? So the job description would say you will resume 9 a.m. You would go to the market. You would what will I say? You would record financial expenses. But for your key performance indicators, you have things like before the end of every day, you have to post all financial transactions. Before 4 p.m. every day, you have to go and bank all cash sales. By the end of Friday every work day, you have to give me report on sales. So you have to be very, very specific when you are doing key performance indicators. And you, as a business owner, you need to think about your whole business process and then use that to decide what your key performance indicators would do. I can imagine it can be very professional related. You can start with something and then ask a professional to do it for you. Okay. Then, of course, like I already said, you have to have job description for every single staff. Even as I would say, Lutzbed not a cleaner, right? It's not just to clean, right? Because I remember I was doing, or we were doing job descriptions for a company's staff, and they had like, I think 10 or so roles, and like, oh, don't worry about cleaner. They'll just to clean. I was like, if you don't have these clear things for even a cleaner, you will start shouting your heads off because you want to make sure that the cleaner knows that they will clean the bathroom twice a day, or they would go ensure that they are cleaning supplies. They will ensure that they make a list of what they need to do. You know, they have to report when they are not, if they are not coming. They have to do this, they have to do that. They have to clean the windows. It will look as if they are very petty things, but if you do not clearly state this, you will keep getting upset as the business owner. So every single staff role has to have job descriptions, okay? Then business operations linked to staff, like I already indicated when I first started this slide. Every business operation. So, for example, going to the market, somebody has to be responsible for that. It has to be in somebody's job description to go to market. So what you have to think about, like for us, when we are doing job descriptions, we always have meetings with the business owner because we want to be able to understand every single aspect, no matter how small that business is doing, even as to calling a customer, or as to reminding them for payments. Every single thing has to be assigned to somebody. If it's not assigned to somebody, it will not be done. Even to you as a business owner, know exactly what you are going to be assigning to yourself so that you know that I am responsible for this and these roles have been assigned to other people, okay? So even you have to have a job description, okay? Then I know that businesses at their growing stage, they can't do, business owners can't be everywhere and do everything, you know, mostly even the high-end stuff. So you want to be able to have mini CEOs, you want to have mini U's, right? So you need to pick key people that you trust, that you think that they will remain in the business, and you need to train them to be like you. So you want to explain to them what your thinking is like. You want to explain to them, you know, why you decide to do this, why you decide to go with this customer and not go with that customer. So you have to explain those things. And of course, I believe in the carrot and sticks to the philosophy. So always give praise. As you are telling them, oh, this is wrong, this is right, also give them praise when you do something right. And then supervise and have reporting channels. Dr. Itoro, should I pause? Hello? It's like your sound is muted. I can't hear. Okay.
Okay. Yes. Thank you very much. I think we should take some of the questions just so that we can cover some of the questions that have been asked. Okay.
Okay.
Yes. So the first question is from Kemi. Kemi is asking what's the importance of SMEDAN, Small and Medium Enterprises Development Agency of Nigeria? Is it recognized until one is able to get CAC document or CAC certificate? Can that be used?
I do not know about that. If you are going to, if for Nigeria, if you are going to have a business that is recognized, it has to be CAC. It has to go through CAC. I don't know of the small gun. I don't know about that. So if you are going to have a business that's recognized as a registered business, you have to go through CAC. That's the only body that registers businesses officially.
Okay, thank you. We have a question from Simon. Simon is asking, do you seek employees' consent in regards to tax compliance?
No, it's compulsory. You don't. Well, for me, I always say, if you are going with the option of deducting from their salary, whilst you are recruiting them, you have to let them know. Because even when we are designing clients' staff job offer, we always put it there. Your salary, your gross salary is this, and the compulsory pay deduction is this. So your net salary is this. So you are aware. If you don't like it, I'm sorry, move on. Because as a business owner, if you do not pay, it's either you are paying for them or you are deducting for them. But if you do not remit, you are going to be paid up to 500,000 naira for not doing that. Do you want to take responsibility on yourself? I don't think so. Okay, so it's not an option for them. It's your decision as a business owner.
Okay, so because we have some of our entrepreneurs from South Sudan, in case of if the tax requirements are, just in case they are not very clear, like you have said, I think it's important that they inform the employee on time, right?
Yes, definitely. Right from when you are recruiting, you have to let them know, so they're not shocked. But if you already have, we also have sticky situations where you already have staff and now you are aware of the staff tax when they already started. You have to have a meeting. You have to explain it. You have to make them understand. Maybe what you might do is that you might pay part of it, they will pay part of it, but you have to pay it. You have to remit the full thing. So come to a compromise with the people you already are. Maybe give them and say, okay, for the next 3 months, we'll share it. And then after that, when you have stabilized. So that one, you have to have a discussion, but you have to remit it, whichever way.
Okay. So Nkiri is asking, do NGOs pay withholding tax? How is that dealt with regards to NGOs?
Okay, so NGOs do not pay VAT, okay? And depending on your status and the letter that you have been given, and also the industry you are, so not everybody pay withholding tax. So there are two things. I don't know if she's confusing the two. NGOs do not pay VAT, okay? But withholding tax is something you collect from, for example, professional services. You are a legal service or rent. You have to deduct 5 to 10% of what you are supposed to pay and then remit it to the government. But if you are giving a service to somebody, they might deduct withholding tax because you're giving a professional service. Okay, but they cannot tell you to pay VAT because as an NGO you don't pay VAT.
Okay, so I have a follow-on question to that. So what if you are working with maybe like volunteers and you're providing like stipends for them? How do you reflect that in your books? Do you still deduct withholding from that, or how does that, since it's like a stipend?
No, it's not. So these are like volunteers.
Yes.
So the stipend mostly will be like for transport, for data, so those things you will classify them as those, not as salary or as stipend. So if, for example, you have 5 volunteers in your office and they are doing things for you, you give them, let me say 20K or whatever, it's not their salary. It's just to support them with coming to the office, or support them by telephone credit, or support them with buying, whatever, to be able to help them do the work that they have come to do. So I would say classify it as what you intend that to be. Don't put it, if you put it as salary, in your account, you will pay tax on it. So you need to classify it as transport or as internet or whatever.
Oh, okay. Okay.
Yeah.
And if you classify it as stipend also, you probably will pay tax on
it. If you classify it as stipend, it depends. It depends on the state you are in, okay, and depends on how sharp your mouth is. How you can define it. I always tell my clients, it starts from your bank statement. When you are paying these things, the kind of narrations you put, because some people are paying consultants, they say salary, and you're not paying payee on this person. You are putting yourself in high jump. If I have the right to say that, okay. So first, where it starts with is your bank statement, your narrations. Put the right narration. So if you are going to give a volunteer money for transport, say transportation. Don't complicate it and go and put stipend or put salary or February salary. You have just messed the whole thing up. So it starts from there. And then when you are posting your financial reports, you now post it correctly.
Okay. Okay. Thank you.
Yeah.
We have a question from Rosetta. For a Nigerian company whose turnover is less than 25 million, are we still required to pay tax? Is there a minimum?
Okay, so tax is a very broad thing. Maybe you can tax consultant, but tax is a very broad thing. So let me say 25 million, you are not required to remit VAT, right? You're not required to remit VAT. And then as a limited liability company, you are not going to pay the full company income tax. So that's how it applies. So, but please, the fact you're not remitting doesn't mean you don't file. You still file monthly, but you file nil, okay? I don't know if I have a form around me, but you still state how much your income is. And then when it comes to how much that is vatable, you say nil. And then what you are paying is nil, but you still file. Please, you guys should remember that, because you have penalty for not filing, not even remitting. You have penalty for not filing. And that is 50,000 for the first month, 25,000 for the subsequent month. So you guys need to take it seriously.
It's a monthly fine.
Yes, for VAT and withholding tax, it's monthly. So let me explain this. So if, for example, now this is March 16th, we are currently filing VAT for February. So if before 21st of March you don't file for February, you are liable to 50,000, right, for February not filing. Then in April, you still have not filed February. You will pay 75,000 because you still have not filed March. So you have 50,000 for March and you have 75,000 for February. So it keeps piling like that, and you can imagine not filing for a long period of time, how much you are just like, you are owing the government. Yeah.
So please, everyone, try and file your return.
Even if you are not remitting. Yeah.
Okay. So we have a question from Nkiru. What's the minimum wage amount to be taxed for employees? Is there a minimum wage?
Yes. So from this year, January, the new Finance Act, anybody earning below 30,000 and below, you do not pay payee for them, but 30,000 and above per month, you pay payee for them.
Okay. I think that those are the questions we have for now. So they said for an enterprise. So Juliet is asking, for an enterprise, when do you start paying tax? So it's not a limited Immediately. Okay.
Immediately. Okay, so this is how it works. When you register your business with CAC, it's funny, right? When you register your business with CAC, you have 6 months from registering your business to register with FIRS. Excuse me. So within that 6 months, if you get your TIN, immediately have that start identification number, immediately have to start filing or remitting your taxes. But if after that 6 months you do not register with FIRS, you have a penalty for doing that. And the liability still keeps on going because you still have to have filed. So you get what I'm trying to say? Yeah.
Yes.
So I would say it's immediate. Within 6 months, you have to have registered with FRS. And now for you to register, for you to open a bank account for your business, you need a team anyway. So you have to get it done.
Okay. So, but what of a situation where you've registered the company, but you haven't started any form of business at all? So the organization is dormant in a way. So do you still file, or you file that it's dormant? Or?
Yes. So, well, I feel like every person that registers a business registered because of two reasons. What I found out: one, they want to keep the name. They're not ready for business. They won't just keep the name, or they want to start activity. But after registering the business, of course, life happens and you might not be able to start. So what I always recommend, within that first 3 months or 6 months, whatever, if you know you're not going to start that business, write to CAC and tell them that you are not starting right now, and you would inform them when you are going to start. Right? So with that, you do not have any penalty, you do not have any liability. But if you don't write to them, they assume you have started. So you have to now start doing the relevant things with respect to the various agencies. Then one thing, I was going to say something, just keep my mind. But anyway, so that is that.
Okay, so for a business that had started, then later became inoperative, you still, from what you've just said, you just need to write to the authorities, CAC,
yes,
and let them know, okay, you are no longer operative for now, and all of that. Then when you restart, you let them know, right?
Yes, the same thing with also, okay, I can't remember what I was going to say. The same thing with when you stop, because sometimes people register a business as limited liability company and then find out that the responsibility to manage a limited liability company is a lot, because you have to open an account. It costs at least 140,000 to budget account per year for a good audit, right? Then you have to keep a financial report, you have to do TCC. So limited liability company, you have a lot of things to comply with. So they change from limited liability to enterprise, register a new company as an enterprise. But they forget to go and write to CAC to say, we are closing down this business and we are starting this. Because if you don't say that, the liability is still continuing. Right? And then if at the time you remember and you realize that they are now slamming you with a penalty and you want to say you are closing it, you have to pay all that before you can close it down. Okay? So this is something I remembered. What amounts to you starting a business? Because sometimes people say, I've not made any sale. That doesn't mean you started a business. So if you have started to advertise, you have opened a business account, you have an office, you have someone that is helping you do something, even if you've not made sales, you've done all these things, started a business. That's what CAC see as starting a business. So the fact that I don't make sales doesn't mean you don't start a business. So let's try and know the difference, so that you don't say, well, I'm not made sales, but you're trying to get customers to start a business, actually.
Okay, so we have 2 more questions because I know we're running out of time. And so we've mentioned for limited liability companies, for enterprises. Does this still apply to those that register business names, just business names?
Sorry, can you clarify what are you asking, ma'am?
These tax implications and all of it. It applies to limited liability companies, NGOs, enterprises. So Philippa is Elizabeth is asking, what about business name registration? Those that just registered the business name. Does it also apply to them?
It applies to it applies to all businesses. Every type of business, even for NGOs, even if you are not going to be remitting VAT, you still need to register your TIN. You still need to get TIN number. You still need to get TIN number, even though you are not going to, because you need TIN number anyway, right? So for every class of business.
Okay. So we'll take one last question from Oluyemisi. Oluyemisi is asking, what if the business is running at a loss? Do you pay tax on that?
Okay. So I get that question a lot. So tax, okay, let me start with VAT, which is the popular one. VAT is on sales, it's not on profits. Okay. VAT applies to every business, whether you are even an NGO. Okay, when I say you don't remit, that doesn't mean that you will not deal with FIRS, because you still have to get your TIN as an NGO. So VAT is on your sales, is 7.5% on your sales if you are making above 25 million per year, right? So whether you are able to manage your business so that you're not making loss at the end of the day, it doesn't really matter. It is if you are a limited liability company and you have to pay company income tax, it is now based on your profits. But VAT is based on your sale, the top part. Okay, so you will still have to I saw a business that made I was preparing their report and they made over 20 million. But they made loss of 5 million. They paid huge VAT. No, 50 million. They did 50 million, over 50 million, and they paid huge VAT. Okay. So, and they made a loss of about 7 million loss. They still paid VAT. So it doesn't matter whether you are making loss or not when it comes to VAT. But when it now comes to company income tax, CIT, then your loss or profit will not come in to play.
Okay. Thank you so much. The questions are still coming in, and we're out of time, but we will take the questions you have. We'll send them to Olubunmi, and then the responses that she gives to those questions, we'll send it back and share with you in the Google Classroom and via email. So thank you very much once again for joining us. Thank you for sharing your expertise. And if you have one or two things to say just before we go to our entrepreneurs, that would be great.
Okay, so let me quickly say this for Nkiru, because a number of Nigerians or Africans, they have this for serial entrepreneur with several registered business name in terms of TIN and payment. If you have 20 businesses registered, you treat the 20 businesses the same way as every other business, whether it's limited or enterprise. So please be careful when you're just registering business. You wake up in the morning, have a vision, and you're going to register the business. Be very careful because it applies to the same thing, okay? So as a closing remark, I want to just encourage every business owner. I know that it can be daunting, but please, one thing you do not want to close your eye to is managing your money, managing where it's going, what is coming in, and also very importantly, as we've seen, your taxes, because that can just really get you back. So please, what I would say is put your eye on the money, because that's why you are in business, to make money. And of course, I'm available to talk more or to support wherever you want. And thank you so much, Dr. Itoro, for having me. I really had a good time. I hope they all learned something from today.
I think we all learned something. And I think there's a question from Philippa, and I think especially this period where there are a lot of people doing community service and all of that. Mm-hmm. And I think we should address that question. Sorry about that. She's asking, what about NGOs? When they receive funds, how do they address that? And I understand she's asking about filing annual returns, which every NGO should file.
Yes,
how do you deal with funds for projects? There are grants.
Okay, so NGOs are unique in a particular way when it comes to accounts. So let me explain this. So first, when you get money, the grant thing is that you're a non-profit making business. So you don't prepare profit and loss. You prepare income and expenditure reports. That's one thing. Two, you're part of, they can be supporting your business in terms of rent, paying for staff, buying equipment. They support you in different ways. So at the end of the day, what you would now declare as your income over expenditure is not really a profit, because you're going to be putting it back into the business or supporting your business, your idea, or your vision, one way or the other. So when you get money from an investor, you don't record the money as income. You don't record the money as income. Let me put it that way. It is a project fund. So you keep spending from it. It keeps reducing. And then, so I'll put it this way: your COGAS, when it comes to profit making business, is now your activities, what you have stated they're going to be doing, what you're going to be your direct expenses, and of course things that you'll be doing for your business, your rent, your utilities, all those things will now come under your financial report. But you have to be reducing that money that they've given you with the expenses that you are making as an NGO. So what you would declare in for what will I call it now, for annual filing will be what is left for you at the end of the day. Okay, so in the annual returns form for NGOs, you have various boxes that you have to fill as per the various things, and it's clearly written there, so you can kind of fill it as it goes when it comes to annual filing. I hope that answers your question. Who asked the question? I think it was Philip.
Yeah. So thank you again. Thank you, everyone.
I hope that answers your question.
Yes. Hello. All right. Thank you, everyone. Thank you very much, Olubunmi. We really, really appreciate your presence and your knowledge that you've shared. And thank you, all our entrepreneurs. And this video will be made available later today. So we would send it via emails, and it will be on our YouTube channel. So if you need to rewatch it or share it, it will be available for that. So thank you, everyone. Have a wonderful day. Thank you.